Good afternoon. This is Clark Neighbors with the market update for the first week of January 2014. BIS would like to wish you all a very prosperous new year 2014. Just a quick update where some numbers were for the week. Corn down about 5 cents, new crop corn down 6. Old crop beans down nearly 50 cents, new crop down 27, wheat down 4. Since the 1st of December, corn's down 3 cents, new crop down a nickel, so very little change in the grinding corn market as we've talked about. Beans down about 48, and new crop beans down 20, with wheat down 64 cents since the 1st of December. Looking at corn, old crop in specific, we've been in a fairly narrow trading range over quite some time over the last several weeks, between around 420 and 440. Very stagnant trade as far as new crop corn. 450 has tried to be the basing or support level there. We'll see if that holds. Old crop beans 1320, kind of the same scenario with support. And on the wheat, $6, which we breached yesterday. For the first time going back to, I believe, June of 2012. Keep in mind, new crop beans, old crop corn, and new crop corn have touched new contract lows this week. Looking at commodities over 2013, this may be key as we get into the upcoming week with rebalancing. We should see in the area of around 80,000 contracts of corn bought by the funds this upcoming week, give or take. And some of this is based on the results off of 2013 as the commodity funds rebalance their portfolios. Corn was down nearly 40 cents for the year, gold down 28%, wheat down 22, soybeans only down 6 cents, while the stock market was up nearly 30%, crude market up 9%, and some of the softs like orange juice and cocoa and so on were a little higher. U.S. dollar for the year was up 1%. And I think that's something to watch with a little better economic numbers and so on here in the U.S. The dollar starting to show a little more stability, more long term, and I think that's key to watch when you look at investments in commodities versus other options, including the stock market. One other thing I was looking at here this afternoon also, if I go back 2 years to the first week of 2012 and compare it to the prices this year of corn and beans. Ironically enough, 2 years ago right now, corn is down roughly $2.20. And this is again from early January of 2012, 2 years ago. While at the same time, beans are up $1 from 2 years ago. So the point is, the ratio of soybeans to corn, which right now is nearly 3-to-1 on March against March, 2 years ago was less than 2-to-1. So both ratios are at the very far ranges of the dynamics of these spreads. 2 years ago, the market was trying to entice more corn into the marketplace, more supply, if you will. And as you can see this year, the same is being done with soybeans, and with a 3-to-1 ratio. And that's going to be key as time wears on, as how that reaction as we get into new crop and as we get into actually the South American crop, see what kind of the size of the crop, and many looking at a record, some analysts are assured of a record soybean crop in South America right now with a fair amount of the growing season to go. And as you maybe heard, weather as a general is very good in South America up to this date, except for portions of southern Argentina. That's going to be interesting to watch as we get through this tightness of stocks here in the U.S., because the U.S. is very tight on soybeans. The world is not. Some analysts, if you look out about 18 months, if you look at the carryout projections going, a year and a half out in 2014, 2015, talking about 300 or 400 million carryout in soybeans. Keep in mind, we haven't seen a carryout in soybeans like that going back all the way to 2006. So in other words, we haven't seen a carryout of this nature since the new prices were established during that time frame. So what kind of price downside do we have with that kind of carryout? That's to be determined. So keep that in mind. We did have export sales today. Corn was only 6 million bushels. Some of that was due to cancellations with China and also unknown, probably stemming from this GMO scenario. Beans very good. They were well above expectations today. We're about 32% year to date. On soybean sales, we're 28% over a year ago right now in wheat, and we're almost a little over double from a year ago in corn. Of course, corn exports last year were just dismal. But having said that, actually the USDA has more sales in the books for soybeans right now than USDA is projecting for sales for the entire year. So the anticipation as we go through the balance of the crop here with these soybeans is execution of these sales. How many will be actually moved out of the U.S.? Will we see some option origin business be moved to South America? Will we see some cancellations? And that'll be a story to watch over the next 2 to 3 months. A week from today, January 10th, USDA comes out with a fairly big report day, if you will. We get an update, final projection for production for this past year on the crops. We will also get update on December stocks and wheat planting. So there's lots of numbers here in a week. Now the market's anticipating an increase in production, both on corn and soybeans. The market's anticipating some of an increase in exports because of the numbers I just mentioned a little earlier. The questionable part will be the stocks. How did feed usage go for the first quarter and so on? So that'll be interesting to keep that in mind. Again, we're tight stocks here in the U.S. on beans, record amount in the world. We're planning on seeing a fairly substantial increase in corn carryout, as we've seen in previous USDA reports. So, because of that, the corn market is held in kind of a quiet trading range. The other thing to keep in mind with backing up in these exports with some of these cancellations of corn with China, they've also canceled some DDG shipments. And with that in mind, what that's done is put a lot of DDGs back in the domestic U.S. market. The DDG markets went from somewhere around $220, $225 a ton down in the mid-150s over the last couple weeks. And obviously that's having some impact on soybean meal also because of the competitiveness of that protein. So moving forward, 3 things to watch. One, South American weather, which right now is very good. Every week that goes by, that becomes a little bit smaller of an issue. Now we're going to start seeing some early soybean harvesting going on in northern Brazil over the next couple of weeks. We're also in the tail end of corn planting in some sections of Argentina. So that growing season is long, okay? But right now many are looking for a very good bean crop, and corn crop at this point looks pretty good, but there's still time there for having some issues. Second thing to watch over the next week or two is logistics with the incredibly cold weather and record lows throughout a lot of the Midwest and the eastern U.S. could have a pretty dramatic impact, at least temporarily, on movement of grains and many other things. The old thing of planes, trains, and automobiles, we may be fighting that a little bit as far as trucks to move product. Barges having ice problems on the Illinois River. There's talk the Illinois River could close the early part of this upcoming week because of the cold temperatures. That shuts off a lot of that supply that helps feed this corn and especially soybean export program in place. And also rails had some issues because of cold weather and because of other products having a demand for rail cars and for power. Also in many areas of the Midwest, I'm talking to several customers that have elevators or co-ops in certain parts of the Midwest talking about at least short-term kind of a shortage of trucks to move product also. So logistically we're being a little challenged here in the U.S. right now because of lack of equipment and/or weather issues, or both. So the three things to watch in the next week: obviously the USDA report next Friday, and the anticipation going into that, South American weather, and logistics. If you have any questions, feel free to give us a call here at BIS Commodities. Phone number is 800-373-2525, or check us out on the web, biscommodities.com, where you'll find a copy of this YouTube along with some new information called At a Glance, which is kind of a weekly little update with some sort of information. With that, have a happy New Year, and we will talk to you soon.